This is Don DeBartolo, a senior commodity broker and market strategist with Daniels Trading, a division of StoneX in Chicago. I am also the trader behind the Trade Spotlight advisory service. My Trade Spotlight is 3 segments, all under one advisory, so I'm covering the futures markets, commodity options, and future spreads. This is Beyond the Spotlight, a video that spotlights 2 or 3 markets that may become trading opportunities for this week. This week begins with Monday, September 20th. 2021. Please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. All right, so going into this trading session, we had news out of China with debt issues pushing down the U.S. stock market, as well as many of the physical commodities. I still think there's more downside to come. One of those markets that is being affected is the November 2021 crude oil market. We've got a couple things going on in this chart. First, I have a double top going on. The first high is the 12-month contract high that was made at 73.58 on the 6th of July. Then just recently, as of last week, set another recent high at 72.87 that was made on the 15th of September. That took out this recent high. So we have a double top formation. That's a trend reversal formation. So looking for the market to head lower, and you can see the big sell-off we've got going on this Monday. Also on my chart, and I spoke about this in a previous Beyond the Spotlight, is this inverted head and shoulders formation. So this is the head of the formation. That's the low of 61.50 from August 23rd. Then you have the left shoulder that was made at 63.96 on the 20th of July. So I'm looking for the market to trade down into this area here. That's about the 64 price level. I believe the market could sell off into this territory here, and then that can set up another buying opportunity to the upside. We do have a 20-day moving average that just crossed over a 50. That's a conflicting indicator. So you can see the MACD, this is a trend indicator, is starting to turn over to the downside, and there's some downside momentum building. This is a stochastics indicator. So a little bit of conflict there. This is a volatile market. I may want to turn to the options for this particular market to sell on a short-term basis, so puts or writing calls, and then looking for a longer-term buying opportunity down to the 64 price level. But let's get this market on our radar. There's opportunities to buy and sell in this market, so we'll be active in the crude oil market. The next chart I want to take a look at is the December 2021 soybean oil chart. Now, a trade was sent out Friday afternoon in this market, so if you missed it, I wanted just to bring this chart up to show everyone what I'm doing in this market. I'm selling the contract. This is, again, the December contract. I sold it overnight at 55.35. That was a break of this pivot point low right here. What I had drawn off was this upper trend line and a 20-day moving average that tracked along it. That was acting as a strong resistance level. So I wanted to sell on a breakout below this potential support, which it broke through again overnight. So I am short this contract from that price. There was one tick slippage. So 55.35 is the official sell price. If you miss this trade, work to sell the order on a pullback to that price, or take a look at where it's at this moment when you watch the video, and if it's close enough, reasonable by adding on it some additional risk, sell it where the market is trading. I placed my stop loss at 57.15 above some recent highs. That was an initial risk of $1,080, make that $1,086 with the one tick slippage. So went above these lower highs here. I was looking at above this trend line and 20-day moving average, but that was taking on way too much risk that I was comfortable with. If you're comfortable with taking on more risk, that is a more conservative approach to the stop loss above that level. I am targeting this low down here, just above it, 52.15. It's a recent contract low from June 18th. It's a profit potential of 1,920 with the one tick slippage. That's $1,914 target. So this is a very short-term trade. Depending on how we sell off, you can see this is Monday session. May look to move a stop right away, just try to lock in some profit, or at least just reduce some of that risk. If the market could break this pivot point low, though, there's plenty more on the chart for this market to continue down. You can see the trend is down. There's some momentum to the downside already, some volume picking up. So we can continue to ride this one, even if it takes out that pivot point low. May look to add to the position or pull that target. So check your emails from Friday with the trade spotlight details, or contact me directly, and I'll be happy to provide them to you. And the third chart I want to take a look at today is the March 2022 sugar. This sugar chart tracks very similar to the soybean oil. I've got an upper trend line drawn off here that's acting as a resistance level. There's also a 20-day moving average that's starting to track along that trend line. So I believe we've got strong resistance here. This ellipse that I've circled off, that's a low of 1931 from the 13th of September. That bounced right off of a 50-day moving average. That's kind of where we're sitting now in Monday session. I believe a break of that low in that 50-day moving average can see prices continue to fall down to this support level here. That puts us about the 1650 price level is my target on this trade. Stop losses can go above these recent highs, or we can do the math above this trend line or this 20-day moving average. If it's similar to soybean oil, may not want to take on that much risk. Sugar can be a volatile market. I very much like selling this contract to the downside. So this is most likely a recommendation I'm going to put out for this afternoon for tomorrow's trading session. So if you want to, get in early, you can do so, or put an order in before the session closes, you can do so. But the official recommendation should come out later today for the March 22 sugar. So a lot going on today. This is what the Trade Spotlight looks like. It's an email service, so you get this to your inbox, gives you all the details of the trade, precise entry and exit orders, so you know when to, so you know your risk reward parameters for each trade, and a chart that you can click to expand. If you're not following the Trade Spotlight, I encourage you to do so. Just go to the Daniels Trading webpage, click on Advisories, and under Technical Analysis, you'll find the Trade Spotlight, where you can read more, see recent posts, and then click to subscribe. It's a free service to all clients and non-clients of the firm for the time being. Here's all my contact information. If you have any questions about the markets I covered, the soybean oil trade that I'm currently in, or just the markets in general, feel free to reach out. Thank you for taking the time to watch and listen, and happy trading.